A 96-month car loan. This has got to be some of the worst financial advice I've ever heard. What's up, guys? Welcome back to the channel. This video is going to be a little different than ones I've done in the past. I just wanted to talk to you about a little subject that kind of came to my attention, and that's talking about car loans. Specifically, these long-term car loans that are starting to pop up, like ones that are longer than 5 years. I'm guilty of doing some of these things that I'm about to tell you not to do, so I just wanted to get that out there and say, I understand how you find yourself in these situations. So what got me onto this topic? Pretty much I was going through YouTube one night and I was looking at videos on a certain car, and I found a guy talking about how he purchased his. It was a new car. I'm not gonna say which one it is. I'm not trying to call this guy out or anything, so I'm not gonna link the video up or anything, but essentially this guy, he just bought a new car. It was a performance car. I think at the end of the day he said he paid $83,000 for it total once taxes and fees and all that were added in. So on one hand, I thought it was crazy that this car cost 83 grand in the first place, but what really got my attention was when the owner started talking about how he got his financing for the car. The owner actually did is he took out a 96-month car loan. 96 months! I didn't even know 96-month car loans existed until I watched this video. I think what really got me is when I looked at the comment section for this video, I saw a lot of people, there were a lot of people that felt the same way I did, that, this is really bad financial advice. Why are you doing this? If you have to take out a 96-month loan, you can't afford that car. But then there's the other side of the argument of people saying, stay out of this guy's business. You don't know what he can afford. I think just common sense says, at least in my opinion, if you have to take out this kind of a loan, you can't afford something. So I did a little more research, and what I want to give you is my top 3 reasons why you should never get a 96-month car loan. So starting out, number 1, 96 months is 8 years. It's easy to lose track of how much time it is when they throw it in the number of months, like 96 months. You're like, oh, that sounds like a long time, but it doesn't really click in your head. Like 8 years, like holy crap. Most people these days, they're not even going to keep their car longer than 8 years. Not only that, after 8 years, your car is going to have hardly any value left in it, at least compared to what you originally paid for it. My number 2 reason is the longer your loan term is, so again, how many months, typically you're going to see a higher interest rate every time you add on, say, another 6 to 12 months. So you go from say a 5-year loan to a 6-year loan, you might see a 0.5% increase on your interest rate. To make sense of that, I did a few little calculations for you. So compare 2 car loans, both cars costing $50,000. This is the amount that's going to be financed. The first car gets financed for 5 years at 3%. The second car is going to get financed for 8 years at 3%. Just my rough calculations, the car that was financed for 5 years at 3% came out to $898.43 a month, with a total interest paid at the end of the loan of $3,906.07. The second car that was financed for 8 years at the same 3%, the payment comes out to $586.48 per month, with a total interest paid of $6,301.95. So yes, in this instance, you're saving $300 a month on your car payment. But when you realize that the term at the end of that 8 years, or when you're done paying off this loan, you're going to have paid almost $2,400 extra in interest just to have that lower payment. Now I did do a second calculation. Say the second car that was financed for 8 years, the interest rate went up to 4%. That's not an unreasonable estimate. Honestly, that's probably being very generous. If that goes up to 4%, your total interest paid goes up to $8,508. That's a difference of $4,600 when you compare the 5 years at 3% versus the 8 years at 4%. It might not seem like a big deal when people are talking about, 0.5% here, 1% there, just these tiny little changes. But when you really think about the length of the loan and the amount of money you're paying for this car, especially these higher end cars, this kind of stuff really comes back to bite you. You really need to make sure you're figuring out what you're actually going to pay on the loan that you're looking at. My number 3 reason is it's going to take you a lot longer to pay down your loan to the point where your loan is less than the value of the car. The big importance of that is say you get laid off, or say you just need to get rid of that car, you find out you don't like that car, you want to spend your money somewhere else. If you buy a brand new car, it's going to take a big hit of depreciation as soon as you drive it off the lot. Everybody knows that. That's why it's really important to put down a good down payment on a car when you buy it, especially if you're buying brand new. However, it's not uncommon for people to finance the whole car plus, the taxes and the fees that get added on at the dealership. With that being said, if you have a 4 or 5 year loan, you might get to the point where you owe less than the car's worth, maybe 2 or 3 years, versus if you finance for 8 years, it might take you 5 or 6 years before you actually get to the point where you could sell that car and not have to also write the bank a check at the same time. Financing a car for 8 years puts you in a really kind of dangerous position. Things happen. You might need to sell a car. Maybe you have a baby and you realize you need a 4-door car or something. I don't know your situation, but things happen. You just need to be prepared for it. Get what you can afford. Make it as nice as you can and just be proud of it. Now, I don't want to make this video too long. I saw this video and it really kind of frustrated me, so I wanted to make just kind of my response. I guess now that we're at the end of the video, I just want to ask you guys, what are your thoughts on a 96-month car loan? Would you ever consider something like that? Do you think I'm wrong? Please hit me up in the comments below, but try and keep it civil. If you like this video, hit that subscribe button, and I'll see you next time.